I will pass over to Hansa von Busekom, who spoke at one of our conferences a few years ago when we were still meeting physically, and actually which fits very nicely because it's also about the dialogue in anticipating future technological change. But of course, Hansa comes to it from a conduct regulator's perspective. It might or might not be different to José Manuel's, but I'm really interested to hear what you have to say.
Yeah, thanks. Thanks for the introduction and thanks for this invitation. I think symposia like this one are a must. Supervisory authorities do well to join with market parties in thinking about how we can help each other tackle the challenges ahead. Though I would like and have preferred to do this face-to-face. I think that's more impactful and effective if you ask me. And so now the challenge for me is to deliver a story that keeps you watching. Digitalization. People like to say time flies, but if that's true, let's take a look at the speed with which digitalization has unfolded. 30 years ago, there was still open outcry trading. Telephones were still bulky boxes with cords, and you would access the internet via those maddening dial-up modems, the 16K6. Moreover, 30 years ago, there was no such thing as an online event. These days, digitalization is barreling ahead, certainly in the financial sector. I'll give you some examples. Expansion of financial services by big tech and fintech firms. Expanded use of artificial intelligence. Digitalization has widened and simplified access to advice and products. These digital developments have pros and cons. Increasing ease of use and easy access are all well and good, but the advantages have to weigh up against risks that customers are willing and able to bear. While AI can help to serve customers more effectively, AI can also lead to exclusion. Partnerships between tech firms and traditional businesses can pay off in cost savings and innovation, but they can also lead to concentration, risk, and margin pressure. Digitalization has advanced in 3 waves. During the first wave, we got to see the vast potential of digitalization. During the second wave, we staked out a variety of policy initiatives addressing risks and opportunities. These policy initiatives were horizontal and cross-sectional, as well as sector-specific in nature. Horizontal initiatives, including DMA, DSA, DGA, DA, and AIA, all with one common denominator. They regulate digital markets and players, and target digitalization and data, impacting market dynamics, also in the financial sector. Sector-specific initiatives have included DORA, MiCAR, DLT pilot regime, and the digital euro, and we're expecting a proposal for open finance. We are now in the midst of the third wave, in which rules on paper have to be put in practice. It is supervisory authorities and market parties' turn to make their moves. The main question is, how do we effectuate these laws and regulations in practice? That can be quite a challenge. To illustrate, I'll give you 3 examples. The AI Act, Open Finance, and MiCA. First, the AI Act. Talks are still ongoing, and the compromise is likely to come this year. We are starting to see the contours. These are cross-sectoral rules with impact beyond the financial markets and on multiple forms of oversight. At its core, this act is concerned with protecting people, specifically users. Certain specific applications of AI are classified as high risk. Looking at the financial sector, AI applications for credit scoring, life and health insurance are deemed high risk. Suppliers of those products and services are consequently subject to stringent regulations. And what's important is that AI doesn't operate on its own. It's always part of existing products or processes. The AI regulation, therefore, has to be seen as supplementing existing regulations for those products and processes. The challenge is that this technology, these developments, and these problems don't align neatly with supervisory structures. The consequence? Almost inevitably, this lays the basis for a complex supervisory puzzle, given that various sectoral regulators are charged with supervising AI at both national and European level. And let's not forget coordination. I can already imagine an EU AI board. It seems logical, but it means the involvement in each sector of a whole diversity of national supervisory bodies that in turn are often associated in European agencies, such as the ESAs for financial oversight, plus yet another EU-level coordinating board and involvement of the European Data Protection Authority. Are you still with me? So we need strong collaboration between all of us. Second, open finance. Open finance is the next step beyond open banking, facilitating consumer data access and sharing for even more financial products and services. It allows financial and other market participants to gain and share access to different types of financial data. The European Commission is expected to issue a proposal this summer, addressing the risks and opportunities of open finance. The regulatory aim is to expand possibilities for data sharing and the associated benefits. Still, it's interesting to think about where we draw the line. Citizens' privacy is valuable. Last year, we prepared a discussion document with the Dutch Central Bank. On it, we zoomed in on the tensions between market forces on the one hand and data protection on the other. Also, a single data holder that shares data can also impact others that have not shared their data. Here are some points to consider. Anticipated new opportunities for acquiring data and insights will bring more responsibilities for companies processing those data. The link with GDPR is clear, and strong partnerships between financial and data protection supervisors will be crucial. Both supervisory authorities and politicians will have to stay attentive to solidarity risks, such as the one around exclusion. Lastly, MiCA. A speech that ignores crypto is, of course, no true speech at all. The crypto winter and recent debacles have shown just how global and important the crypto assets market is. Problems in these markets resemble those in the regular financial sector. That's hardly surprising, as crypto assets markets are in many ways modeled on the regular system. This means that they've also inherited the risks: extreme use of leverage, unlimited lending, no segregation of assets, etc. The underpinning technology and mystique only heighten the risks. The big question and the challenge is whether MiCA can bridle the tumultuous crypto markets. Could MiCA have prevented the FTX debacle? Frankly, I am not so sure. So how do we feel about MiCA? We think regulation is an improvement, but it doesn't make the situation watertight. MiCA is only the first step. The perception of safety is greater, but MiCA cannot create a fail-safe crypto land. At best, it offers a somewhat more protection. What I am certain of is that MiCA creates handholds for supervision. However, existing regulations can be useful too. In the case of a fictitious situation concerning an FTX-type entity with a main presence in the EU, MiCA would provide a basis. What do I mean by this? First, we need to identify what type of entity we are dealing with. An investment firm is, of course, defined under MiFID, or as a CASP, a crypto asset service provider, that offers multiple services. Both frameworks, MiFID or MiCA, offer means of supervision of both governance, conflicts of interest, segregation of assets, prudential oversight, and so forth, with the caveat that MiCA has been developed to a limited extent, and this will lead to challenges, I can tell you beforehand. And what about all sorts of tokens created out of thin air? How should we categorize a FTT as suspect as a utility token? Why is this qualification important? Some of these tokens have no intrinsic value, therefore they are unsuited to serve as collateral for transactions. Being less detailed than MiFID, MiCA requires interpretations by supervisory authorities, timely and decisive interpretations. Not 27 different interpretations, but rather a clear line laid down by ESMA. What do we need for this? A good grasp of the market and coordination and cooperation among 27 member states. A good grasp of the market necessitates constructive dialogue with market parties. Interpretations require cooperation, speed, and courage. Ladies and gentlemen, we have witnessed advances over the past 30 years, and in the years to come, digital advances will move even faster. Consider the evolution of generative AI and even quantum computing. Next generation forms of embedded finance, further integration of financial products into digital interfaces that users interact with daily. New interesting market dynamics will arise between tech companies, both large and small, digital platforms, financial market participants, and policymakers. Policymakers will do their utmost to develop regulations based on these developments in order to facilitate the use of new opportunities and at the same time addressing the risks. Regulators and supervisors do their best to translate these new regulatory frameworks into the ever-changing and complex reality. For that, we need intensive dialogue and intensive collaboration between supervisory authorities and the sector, precisely as we are doing here at Ethel. 30 years ago, the potential of digitalization and the speed at which it unfolded may have caught us off guard. We must not let that happen again. We need to plan for the future and start today. Thank you very much for your time.
Hanzo, thank you very much indeed. And just to reassure you, I don't think you lost anybody in the audience with the presentation, even though it is in a virtual environment. And I really, really liked the points you made. They fitted nicely with what we said before, and which we will talk about later, which is the overlap between different supervisors, financial and non-financial, and how they interact.
It's going to be a puzzle. It's going to be an interesting puzzle.
Yes,
and we will talk a lot.
Yeah, I'm just thinking whether we prefer the supervisors we know than the supervisors we don't know, or whether we have to build up, as you say, a platform, a forum of supervisors.
Yeah.
But that would be a challenging coordination issue. I think also your point about data and the sharing of data and what type of data and who shares data with whom, I think is a very interesting prospect. And the open finance debate will, I think, bring that to the fore very clearly. And your last point is actually one of the ones that I will discuss with Verena tomorrow and just mentioned with José Manuel, which is exactly your point about MiCA. There are so many elements of definition in there. A single supervisor, you could decide that the crypto asset is actually a security or commodity and bring it into MiFIR, even if the other 26 might not agree with you. At least
I fully agree with that. And the importance of a level playing field is going up quite a bit. And so it's important now, given the digital nature of these products, it's absolutely fundamental that we get this right. So therefore, the AFM strongly supports a central coordination role here for ESMA. I think we need to do this together. Otherwise, we'll get a race to the bottom, and the customers will pay the price for that. So I think it's a big responsibility which lays upon our shoulders.
Yes, I totally agree with you. I'm just saying, let me see here quickly. No, that doesn't make sense. No, I think actually, thanks, Hanzo. I was just seeing there were some questions coming in, but I don't want to drill down on a specific article within MiFIR or MiCA. I think that's not kind of appropriate right here, right now. I very much welcome and appreciate the thoughts. Hopefully, I will see you in person next time.
Yeah. Thank you so much for making it possible to do this digital. It's much appreciated. It was a great experiment. If any of the audience has follow-up questions, please feel free to reach out. My standard joke is usually there's only one Hanzo, so you can find me via LinkedIn. And if you drop me a line, there will be an answer. So thank you very much for making this possible.
I have the same curse or blessing because there's no other Nicholas with CK.
There you go.
Good. Thank you so much.
Thank you so much. Good to see you all.
All the best.
Bye-bye.
Bye. Bye.